All right, welcome to the Delayed Gratification podcast. I got one of my great friends and probably the most well-traveled person in the world, but we're gonna get there. Mr. Brian Joubert. Brian, tell us a little bit about who you are, man, and what you do.
All right, man. So I'm the tax strategist.
Uh-oh.
So I've been in this game for 25 years. Originally from New Orleans, man. Just entrepreneur all my life. Never worked a job more than 1 year. Been an entrepreneur since I was 13. Got into the tax game and loved it, man. And just took it to another level. Like you said, worldwide traveler. Love helping. I think my new passion is really just seeing other people grow, creating other millionaires, though. So that's a little bit who I am, man.
Strategist, tax strategist. What's the difference between a tax strategist and an accountant and a tax preparer?
Well, the biggest difference is funny because I didn't really decipher the difference between the two for a long time because everybody said tax preparer, but then what I started seeing was like every time I come to people, they say, "Well, Brian," people come to me, they say, "Brian, somebody referred me. They say you can give me some strategies to be better." And so I would sit down and I would consciously think of ways to change your situation. I would come up with strategies. And so a strategist basically someone who actually going to create a strategy based on what you're trying to do. So it ain't just coming in writing off all your expenses. It ain't just coming in filling out the paperwork. We're going to come up with a strategy. If you say, I'm trying to buy a house, I'm trying to get some land, I'm trying to do this, I'm trying not to pay no taxes. We're going to come up with a strategy for all that. A tax preparer pretty much comes in and just do your taxes. They ain't asking no questions. They don't care about what you're trying to do or any of that. And they're going to prepare your taxes, but they ain't going to give you no strategies to grow your business, grow your taxes, enhance your money.
So what I'm hearing is, again, remember we're on the Delayed Gratification podcast, but what I'm hearing is sometimes you got to wait to get that plan executed properly. You help me start. I come in and give you my idea. This is my goal. I want to buy a $20 million property, right? You look at where I am now and we come up with a plan to get there from a tax perspective. What does that look like on a regular basis, though? Are all your clients, do you sit down and get them a game plan, or do they come in and you just prepare their taxes?
No, not all of them, because everybody ain't game plannable. Some people are just where they at, And I always say some people, and this is why I changed courses and the type of clients over the years, because I knew that I had value in this business. I knew that I loved the business. I had experience in it and I was really good in it. So if you didn't really have nothing that you was trying to do or really didn't have, I really couldn't be of value to you, because if you just got a straight W-2, anybody can do that, and I didn't have strategies for you if you was not trying to do anything. Not that I didn't want you as a client, but I knew with all of the resources I had experience, I got to sit down with somebody who wants basically delayed gratification and not instant gratification. See, instant gratification is when I don't have no value behind what I'm doing. I want it now. Give me my refund now. How fast is it going to come? But when you start talking about delayed gratification, that's when you're putting a plan together. So that's where I'm best at, because again, when you come in and you say, well, Brian, my goal is to get me a $20 million property. My goal is to get me a $10 million property. My goal is to get me a line of credit of $200,000, $300,000, $500,000. I say, all right, this is what we're going to do. Typically, they want to see a year and a half of stuff, 2 years. We're going to start now for 2 years. So we're going to start putting your returns together this year, how you need it to be when they require 2 years. Or if they need this year and a profit and loss statement, we're going to say, all right, well, this is what you need to do as far as your balance sheet, as your profit and loss, because we got this year, we almost at the end of this year. So we're going to start working on the beginning of next year. And that's basically the difference between, what I do and what most people in my industry does.
So you just said something. So a lot of people, I hear a lot of people right now in the entrepreneur space on social media talking about getting unsecured funding, right? I know, right, that it's tougher to get the lines of credit. Seems like you know a little bit about that. Does it normally require us to have several years of tax returns? And have you had a lot of clients where you've helped them to get that line of credit based upon the tax returns?
Oh, yes, most definitely.
Okay.
Because now when I'm transitioning, thanks to yourself and a couple other people, I deal with a lot of investors now. I deal with a lot of people that's getting funding now. And what I'm seeing is a common practice. Like most of the time, I can tell most people what they need before they even come to me. And because I've seen it so much, and now I'm so experienced at it. But yeah, that's basically what you're going to need to do is position yourself from a tax standpoint. Not every situation, because you'll hear some people say, well, we do situations where no tax returns required. It's going to always be an exception to the rule. But again, for the most part, if we talk about even 70 to 75% of the people want to see some type of financials. They want to see at least a couple of years of tax return. They want to see a profit and loss statement. They want to see a balance sheet. They want to see something. So you still got to be in that game somewhere, unless you just created a method where you got a source where you don't have to do any of that stuff. And that's not common.
Got it, man. Yeah, so I'm going to come back to that. All right. I do want to come back to us filing taxes and what that looks like. One thing I can say, and you have changed every course that we've been at, right? You always talk about this one thing that is like, I didn't know anything about it for 20 years, right? That I was in business. It is why you set up an LLC and how you set up the LLC. Can you go into what makes what you tell us a little bit different than what we've learned over the years? Especially most of us that are, I'm gonna say at a certain age range, man, we just starting to learn how to set these LLCs up properly, because it's a newer, I don't say setting up an LLC is new, but the way you set it up properly, we're just now starting to hear about it. So tell me a little bit about kind of what you teach us, man. I'm gonna say that.
Yeah. Well, one of the things though, and I built a lot of my success probably over the last 15 years, really just getting people to understand this and simplify it. And the reason why I say this, I always say I don't always introduce everybody to it, because when I talk to most audience and I say, who has an LLC, 90% of the people that have a business have an LLC. So they know they should have it. And I ask them why, and they tell me why. And you have situations where you have people, man, it's so funny because everybody heard of it, but nobody really know why they did it. So when I talk about S Corps and I say, well, this is the leverage changer, this is the game changer. Most people say, well, I heard of it, but my person told me, but I don't know why I need to do it. The thing about it is, Ramon, it's been around, bro, for 20 something years. Robert Kiyosaki wrote a book called Rich Dad, Poor Dad. This has been in this book. This book is at least 23, 24 years old. He put it in there in chapter 17 when he talked about corporation. We read right past it because, see, taxes is boring to people. So they're going to read it, but they ain't going to pay attention to it. And the beauty of it is that the answers were there. And so when I saw over the years how not just myself was saving thousands of dollars in taxes. And so I know we're going to get into the travel, but one of my methods was all of the money that I save from not paying taxes, I'm going to use that to travel and invest. So I had freed up money. This is why, I started at such a young age and understood this, because I understood this concept. So when you put the S Corp into election and you cut your taxes in half. So when I'm an LLC, but I choose to be taxed as an S Corporation, I cut my taxes in half pretty much. Bruh, who don't want that?
So I'm an LLC, but I file as an S Corp. Why wouldn't I just file? Why wouldn't I just set up an S Corp?
Because see, if you set up an S Corp, when you look at it, if you look at the two, the corporation gonna tell you need a board of directors, you need minutes, you need to have quarterly meetings, you need to pay yourself a reasonable salary, you need to do all of those things. A LLC is I just set up the LLC with the Secretary of State. I don't have to have minutes. I don't have to have board of directors. I don't have to have quarterly meetings. I don't have to W-2 myself as an LLC. It's a limited liability company. But the problem with that is I separate myself from the company. So if somebody try to sue me, this is the part that everybody understands. But with the part they don't understand with the LLC is that you still get taxed the same way you does as a sole proprietor. You pay double taxes. This is where the election is so important. So I want to be a LLC because it's the most simplistic entity to start. That's going to separate me from my company. but it don't separate me from the double taxes. This is why most people don't grow, because they don't want to show income because they don't want to pay the taxes. So they reduce their income so low, now they can't qualify for nothing. The way you win is through ownership. You can't own nothing if you ain't showing nothing. So most of the cases now, when we start talking about showing with the S Corp basically is what we call a pass-through entity, meaning all of the money you make from the business pass through the business, meaning you pay no business taxes. So now I cut my money in half. So now I still have the benefit of separating myself from the company, not getting sued personally, but now I got the tax break where I don't pay the 15.3% in additional taxes.
That's a lot of money.
That's more than the tax rate now. The lowest tax rate now is 12%. They dropped it when Trump came in, but you still cutting your taxes almost in half now by understanding this. So if I can cut my taxes in half, I'm willing to show more money now on my taxes with my business. If I'm willing to show more money, I can go get more money.
In my business.
Okay. Rich and successful people understand you play with other people's money. You know, you play with other people's money. This is why you hear millionaires and billionaires always talking about getting investors, going to the bank. They got $500 million, $1 billion in the bank, a net worth, and they still getting money from other people. You don't play with your own money. I'm
going to go back to that LLC.
Uh-huh.
So I'm an LLC, but I elect to file as an S Corp.
Uh-huh.
How do you do that? Like, who teaches us that? Like, when I first set up my LLC, it wasn't anything on there to tell me. I don't think it was on there when I went on there to file it myself, right? So let's say I have an LLC that's 2 years old. I've been paying all the taxes because I'm double taxed basically.
Yes.
Right? How do I go from I don't want to change my name because I got my business bank account, I got my address, I got my history, I got stuff set up. What do I do now if I want to cut those taxes now? Can I change it now?
Yes. And like you say, nobody teaches you this. It's a game. And we don't know how to play the game. Nobody taught us how to play the game. And when you don't know the rules of the game, people can tell you anything. They're going to be able to put anything over you. So it's a couple of forms that you have to fill out. You know, one is a 8832 and one is a 2553 form. You know, and so you can go and fill those forms out and it can elect to be taxed as an S Corp. One of the things that we have been so great at is even understanding the concept of going back, because like you said, a couple of times you have actually got double tax for filing, you know, those 2 years that you showed income. Now, I've actually went back retroactive those forms to 3 years ago. You become an S Corp now. That means if I become an S Corp and they retroactive 3 years ago, I shouldn't have paid those double taxes. Now they give me that money back.
Whoa. So let's say last year, past 2 years, I paid $100,000 in taxes, right?
Mm-hmm.
But I had a traditional LLC. So now coming up on 2022, when I file my 2022 taxes, we changed the election.
Yeah.
But you go back to 2021 and 2020, and we can possibly get some of that money back.
Yeah, once the IRS accept your paperwork, because you have to send it in, it takes a process. It's even longer now because the pandemic didn't threw everything off. You know, it was already a slow process because it had to be something that had to be faxed and not even emailed, faxed or mailed. So it was a slow process already. The pandemic is slowed it up because the IRS is still behind. But once you send it in, they send it back and say you've been accepted as an S Corp. Then now at that point, you can start doing everything back, because if we filled out the paperwork and we said, when it asks you, when do you want to start the process of an S Corp, you can backdate it 3 years. If they come back and they say you've been an S Corp, you've been elected as an S Corp since 2018, then at that point we amend your 18, 19, 20 returns. And now because we amended them and you normally don't pay that double tax, you get that double tax back. I just got a client back. They got $26,000 back.
They got how much back?
$26,000.
By changing the election?
Yeah.
By being retroactive or?
By being retroactive. because the last 3 years they shouldn't have been paying those double taxes, because technically they had filed the paperwork. And see, that's another thing, is people filed the paperwork back then, but the IRS never processed it, because anything by paper with the IRS is hit and miss. Anything by paper is hit and miss. And unfortunately, they're still dealing with paper, and so what happens is that, you can put on there, because they give you an explanation why you just filing it. And you can actually, put the explanation, and there's what they call a late relief too. So if you filed it late, you can basically put an explanation why it was late, and so it can be a bunch of reasons. They even help you out and now they give you a drop down of explanations you can use. And one of the explanations said, mailed but not received. So because they know that this is a common practice, that you can put it in, but the IRS never received it or never processed it. They know this is a common practice.
Wow, 26,000?
Yeah, because those last 3 years they was filing as a sole single member LLC when they really was a S corp, and they had been filing those years and years and paying that extra tax, and the tax person didn't tell them, the tax person didn't know. They didn't know no better. And so when I looked at it and we started talking, it was like, well, no, we're an S corp. And I'm like, you sure you're an S corporation? It was like, well, yeah, we did the paperwork. We got a letter years ago saying this. I said, oh, yeah, well, we got to amend these. And when we amended it, changed.
Tax strategist. When should I start coming to you to figuring out strategies? Like, do you have like a consultation? What does that look like? Because a lot of us just say, you know what, it's 2022, I'm going to go file my taxes, right? When should we start talking with you, and what does that process look like?
Yeah, I would say halfway through the year, man, at least halfway. One of the things that really, really upsets me is the fact that I don't get enough people to call me throughout the year.
You mean from January? You mean from what? When is the tax return time? That's from January to April, right?
Yeah, pretty much. That's the peak time.
Okay.
For most people, that's the IRS schedule. I always say that ain't our schedule, because we probably do more returns after April than most people do all year. And so we pretty much all year round. I keep a full staff all year round, because this is not just a situation where you need to be filing from January to April. If you're a business owner, you really need to have a rapport. So with us, we encourage you, but it is, to me, man, I just don't understand. As many clients that I have, with the number of people that actually come, bro, it shows me why a lot of people, businesses are not striving, because we don't. Like, tax planning is a part of success. Like, you do it for everything else. And my number one thing I always say is, athletes and entertainers don't wait until the season to start getting in shape.
Some of them do.
Well, yeah, some of them do. Yeah, yeah, some of them do. But the same concept, they have an off season. Mm-hmm. They start practicing 4, 5, 6 months. Some of them never off, but at least 6 months prior to the season, they start off season conditioning, training camp, and then they get into the season. That's your business. You got to have a off season conditioning. Then you got to have a training camp, and then come January, you're ready for the season. But you can't get in January and say, well, now I'm going to start getting my paper together. I'm going to start asking questions. It's too late now, because everything that's going to affect you is going to be for this new year now. Going back, we can't change nothing, because it is what it is. So that's like an athlete saying, all right, the season start in October, so I'm going to start lifting in October.
That makes sense.
Yeah, and so that's the concept behind it. You got to do this stuff proactively, man. You got to.
So really what you're saying is, right now we should already know what's happening for the rest of the year.
Oh, yeah, you're already late. Yeah, if you're just starting right now, you got to think in a week and a half. No, not a week and a half. In about a week almost, we're going to be in the 9th month of the year, bro. We're going to be in the 9th month of the year.
Mm. Yeah, we are. Good.
Yeah, so that's crazy.
So now that we know that, right, because as we're talking about, the point in having a great tax strategist and planning and filing is so that we can invest more, take those trips, right? And I got to ask you about that in just a second, though, because I ain't figured it out yet, but I guess you got some good tax strategies. But in building wealth, right? I've heard many people, including you, talk about understanding why the different tax codes were put into effect. It's really for the wealthy, right? Even when you go back to, Mr. Trump, what did he do that we should have took advantage of while he was in office? And prior to him, the tax code, why is it like a cheat code almost? Like if we know it or if we have a strategist that really know the codes. So how does that help us build wealth?
Well, it helps us build wealth. If you really like what I found myself is the more successful that I've gotten, the more stuff I read and listen to from wealthy people. And it's crazy because everything comes back to tax savings, tax free. If you listen to successful people, they talk about tax savings and tax free because they understand if something, is taking 40 to 50% of your money off top, how can you really be successful? Or you got to work twice as hard. And what we got to understand is we're human. So being human, we're limited in our time, our days, our energy, our lifespan. So if you're trying to work twice as hard to achieve something, by the time you achieved it, you burnt out. You can't enjoy it. So if I learn how to keep 30 more, let's just say most people are getting 40, let's say 40% of your money is being taken. That means you're living off 60% of your money.
So I make $50,000 a year. I'm really only living off 30,000.
Yeah. Yeah. If you're lucky, because the higher you go, the more taxes you pay. So you probably less than that. So again, if I learn now you're living off 60. If I learn to keep more of my money, I learn to live off 85. I'm going to have a much better lifestyle than you much faster because I got 25% probably more money to now invest.
Admit now. So we're going to have some discipline. There's going to have to be some delayed things happening because now that 25% extra that I got, right, I need to invest it.
Yeah.
Or save it. Okay. All right.
And the savings could come in the form of people say, well, you can't, you don't want your money in savings. Money that's saving is dead money. But it could be in the form of saving it to the point of you're not keeping it there long term for wealth. You're keeping it there for lifestyle.
Mm-hmm.
For lifestyle. So it's easily accessible for lifestyle. Just like I said, when I first started off, my whole goal was, this was probably about 15 years ago. I've been traveling for quite some time, but I said, I'm going to put $25,000 aside for travel.
Per what? Month?
No.
Oh, I mean, we trying to figure out what's your budget, man.
Yeah. Maybe for the year.
$25,000 every year.
I said I was going to put $25,000 aside for a year. So just think, if I'm able to save thousands and thousands of dollars in taxes, that most people just figure that's a part of the system, so they let them take it. That means if I learn this early on, and I'm able to put this and have a budget aside, I'm going to have a lifestyle way better than you, much faster than you. And this is why I tell people, when people say, I want to be like you, I want to do like this. And I say, it's going to be hard for you, because if you're not understanding that you got to put this aside, you got to have disposable income, you won't be able to do it as often, because see, what this does is create freedom. It creates freedom. Because I'm not a slave to now making money to try to get money to do things. Because if I already got the money, I don't have to work as hard and as long, because I already got the money set aside for it. So it creates freedom. So now with the freedom, I can do all of these things. And that's what most people don't understand, that it creates the freedom. But see, now even part of that, even the other part that I save, even if I didn't save 25,000, even if I only save 15 for travel or 10, and I take the other 15 and put that into investing and let that money grow long term, that means now by the time I hit 50, I don't have to work as much again. I created freedom because I'm not scared that I'm not going to make money when I'm older, because my money has already been working for me. So now I can go and live my life and not have to say, well, I got to get them hours in. I got to make that money. I got to get the bag. No, the bag is taking care of itself. I always say the thing about it is I never basically get a chance to work. I never get a chance to hang out with my money, because my money is always working. Like, man, like I never can hang out with my money because it's always working.
But you got to pay taxes on it.
No, not on investment stuff. And see, this is the game that we got to learn, because now we ain't even get into the whole life insurance part of it, how eventually you start pulling that money every year tax free.
Okay. I can't let you go no further though. So 15 years ago, you were putting away $25,000 a year for travel.
Yeah, that was my budget. I was like, let me put at least 25 on the side.
So for the past 15 years, you've been doing what we see, right? How many continents have you not been on?
I've been to every continent. There's 7 of them. So
You've been to every continent.
yeah.
How many wonders of the world is it?
I've been to all 7 ancient wonders. Yeah.
Right. It's some new ones though.
Where they at? I'll get them. I'm working on the planets now.
I'm gonna leave that one alone. You jumping in with Elon?
Yeah. I'm taking the ride.
That's
man.
250, right? So you just got to save up that.
I'm taking the ride.
You're gonna take the ride.
Yeah.
How often do you travel?
I always say I try to do. I probably do 2 trips a month.
Okay.
Yeah, I probably do 2 trips a month. Like my goal was to always do 1 passport stamp, a month. So at least 12 trips a year. But most cases I'll do 2. Like a lot of them just be unplanned. Like my partners, them will call me sometime and say, man, we going to such and so. We going to Panama, and I'd be like, all right, well, shit, I'll meet y'all over there.
How you, and I know you have your own business, but how are you able to do that? I'm still, because you put away what most people make, $25,000. Like that's average American income, right? How does that work? Is that because you've learned how to be disciplined? You've learned how to save more with your taxes? Is it a combination? Is it being patient? Like, how are you there? Because I mean, honestly, man, you are a true inspiration. I think you went out of town this past weekend, and even on smaller trips, you make them seem so big. You know what I mean? How is that? What can we do to travel like you travel?
Well, the first thing I tell people is you got to be intentional, bruh. You got to really want it. This was always a desire and dream of mine, and we got to understand that, to do that, you got to be, when you say, I want to travel, that means that you got to make some sacrifices somewhere else. So you got to put some money aside to make sure that you start traveling. You got to do that. And I think that's what we don't do. And it's freedom. Like for me, I love freedom. I love to be able to go. So if you really love it, you got to take the sacrifice. So again, where can I sacrifice? In your taxes. If you're giving somebody 20 to 25% more than you should be, then that's money that you're leaving on the table. That's your travel money. I always tell people, I guarantee you, it's nothing that you want to do that you can't do because your money is tied up in your taxes. So if you say, man, I don't have the money to invest, I don't have the money to travel, I say, I guarantee you, if you work a job, you're paying more taxes than you should. If you have a business, you're paying more taxes than you should. So the money is in there. So the way I was able to do so, again, is I consciously say, typically most people pay this amount in taxes. Since I know and learn this tax game, I'm not going to pay that much. And if I'm going to keep it to what you pay, what I know I can save, I don't look at that as extra money. I look at that as lifestyle money. So I started putting that money aside. I started putting it aside. And the tax business has been very, very good to me. I could say that it's been very good to me. And the thing about it is that you don't have to be. I always said I'm probably not the richest person but I'm the most successful. Ooh. I'm not the richest, but I'm the most successful. And part of success is being able to do what you want to do, when you want to do it, how you want to do it.
You definitely do that.
And I'm at a point in my life now, and this was all intentional. Like, I don't have to have. And I know Ryan. Me and Ryan used to always say we're going to buy an island. We're going to buy a jet. We're going to do all these things. This was years ago. And the thing is that I'm more satisfied now knowing I can possibly do those things than actually having them. So my thing now is peace of mind and freedom. So I'm intentional about creating those things. So I don't have to go out and get the car that I said I wanted once before to now please everybody else. Because now I could be intentional about taking that same money and buying a property, buying a building, buying freedom. And that's more important right now.
Yeah, I was watching interview with Elon Musk, and he talked about he was selling all of his assets. And they was like, why? You still got a lot of, he was like, I don't really need them. Like,
Yeah.
you know, why do I have them? I know I can go get them if I want them. And that's, again, man, why we started and why we're talking about delayed gratification is some things will have to wait. Some things will have to be sacrificed. You know what I mean? Just like you're saying on the tax side, if I can figure out how to save 20% on the $100,000 in taxes, because a lot of us are going to be entrepreneurs that make some good money. But if I can save an extra $20,000 a year, in 20 years, that's $400,000 without any interest being put on it. That's a lot of money, man.
Yeah, it's a lot of money. And what we don't realize, like I said, we don't look at the long haul. You know, and that's the thing, is that you got all of that money over the long haul becomes beneficial. So it's a lot of cash, and I don't knock nobody. I tell people, man, get your bank, you know. But again, I've been at this, Ramon, for 25 years. You know, and I tell people that's now what I'm really excited about. This is what I try to teach people. This is where I try to get you in position to is sustainability. That's the thing. And this is where taxes come into play, because when you think about the amount that you can not pay the government over 20 years and what you can put into investments and saving in your lifestyle, bruh, by the time you retire, you've done everything you wanted to. So at that point, now it's a matter of just stacking. So this is how we create the generational wealth. And it all starts with taxes again, because now if I'm not spending exuberance amount of money at 50 because I'm trying to still live the lifestyle that I wanted when I was 30, I'm modest now. If I'm modest, I'm saving, I'm putting away, I'm investing. That's the money now that carries over to my child. With that, my child don't start from zero like I did, like my parents did, that it took us 10 years to eventually get to a point where we can create the freedom, the success, and the mindset that we needed to be great. Because they have a chance.
You just said something, though. I give it to my kids, but then they're going to have to pay taxes on it.
And it depends on what form it comes in. It depends on what form it comes in. You know, so like you have some pension stuff. If they get that, they got to pay taxes on. Okay. But if you got some retirement and life insurance policies and some different things like that, they don't.
Can I feed, you talked about insurance, that thing we call a trust, and there's different kinds of trust. What do you think about that? Can I feed that money that I save in taxes? Can I put it all into a trust? And what kind of taxes am I paying when I put it into the trust?
Yeah, it's some trust that you ain't gonna have to pay no taxes on. The one thing that trust keep coming up now, everybody's really into the trust thing now. Right. I don't speak a lot on it because I'm not an expert on that. Really, that's something that I'm looking more into now because it's coming up more. But for years, it never was a really, really big thing. So I never put a lot of emphasis on it, but I understand the importance of it. But it's still, what I try to do now is, most people always say not trustable. and not in a bad way, not where I'm saying that you're not trustable, where we can't, but you don't have nothing. You talking about a trust. You don't own nothing. You don't have no investment accounts.
I'm preparing, though. I'm planning.
You know, and so you have these things. But my thing is, learn to get a tax ID number first. You know, so you're talking about a trust, but you don't even have your LLC straight yet. You don't have these things straight. So you can put your LLCs under your trust and all these different things, but you don't even have an LLC yet. You know, and so let's get those things. Let's get the basics first. Gotcha. And then we can move into those things. But again, I don't speak a lot onto it because, again, if I'm not proficient in something, I'm not going to sit there and give you a whole lot of lecture on it. Now, just yesterday, I pulled up some YouTube stuff to kind of look at some different things, you know, and I'm going to learn about it a little bit more. I'm going to take some courses and some classes to kind of learn, because I know that's what people at, and I know the new generation kind of understands it and moving into it. So I want to make sure that I'm more proficient, but not only that, I want to make sure that my team is proficient. Because 10 years from down the line, your son ain't going to want to deal with no 60-year-old man talking about taxes.
Nah,
he wants somebody that look a little bit like him and his age.
Yeah, look a little bit better.
You know?
Well, the one reason I bring up the trust is because one of the main benefits, because we did a lot of land trust when we were flipping property. But again, the tax side of it, we really didn't know. We was trying to not let you know who we were, right? It wasn't based upon what the tax benefits are. But one of the tax benefits, biggest tax benefit that I understand, is not having to pay like the transfer and the state taxes, or like, because if you have a will, even if you got a will, right, you still have to pay some fees associated with probating that will. But with a trust, everything's sitting there, so you save I know in that transfer tax, but it's probably also some other things that you're saving. But that's
you
probably
save it
one of the
on
biggest things.
estate taxes and some other stuff that you're dealing with. And again, this is why I'm getting into that arena, because I haven't had to have a lot of experience with it. For one, so it was no need. Like what I focus on are things that I see probably 95% of my clients deal with. So I can be proficient and an expert in those industries. Yes. So I'm extremely good in that. So now if my clients start transitioning to that, or I find that there's an education method for me to get into that to basically now teach them that, I'm definitely doing it. And that's why I definitely want to do it. But, I've been blessed, bro, in the sense of not having clients not pay taxes. And I always say this, in 25 years, you can check, research, do your due diligence. Like if I strategize you to do S Corp or partnership returns or different other strategies, you can go to the county, the city, the state, the world, whatever. You ain't gonna find one audit under my name.
What you mean?
Not one audit, bro. Like you got in
25 years.
In 25 years.
No audits.
No, none. I guarantee you. Do whatever check you want to. Call around, touch bases. Now, some of the things you can't control is random audits. Mm-hmm. You can't control random audits. Again, I guarantee you can't find one client that say, well, I went to LB Tax Service, man, and they actually had me paying so much in taxes. Again, because knowing strategies, knowing loopholes, and knowing situations, my clients don't pay more taxes than they need to pay. And so that's why I say my clients, and I'm spoiled in that sense. So I do want to learn. When I hear people say, well, yeah, I heard somebody pay those things, I'm like, no, that's crazy. I got somebody that probably paid now that sent their paperwork from me to somebody else, and they probably paid about $20,000 more than they need to. I'm going to amend it based on some things I know and probably get that down to from 30 to 10. So maybe save them $20,000, but it's crazy because people do too much. Sometimes people do too much, and sometimes you don't have to do too much. Just do enough to be right. Mm-hmm. Be enough to keep you in the right place. And that's my whole thing is, for the longest, I'm gonna be an expert on what I know and what I do. So I'm not out here like people giving people half information on trust and stuff like that. I'm gonna tell you, I'm gonna refer you to somebody who's been doing trust for 15 years.
Got you. I work a 9 to 5. Mm-hmm. Right. I do pretty well on my 9 to 5, but the tax is killing me. Okay. Right? How do I stop that? Like when I say I go to work, I work. Well, I don't call it 9 to 5. I'm working really 60 hours a week. Yeah. And let's say I'm making, what's a good salary? $250, yeah. Right? In the South. I'm gonna say we living in the South. I ain't gonna say in New York because that's a different animal up there, right? But I make $250. But I'm giving almost $100,000 in taxes. Am I correct?
Yeah, they just broke something down and it was like 140.
Yeah, that's what I'm saying. I'm giving like $100,000 in taxes, right? So really, which is crazy to me, right? I've earned my $250, but let's just say for numbers' sake, I gave up $100 in taxes. I'm working off $150, right? How can I do something about not giving that $100 away? What do I do?
Bruh. Employees, unfortunately, pay the highest amount of taxes. If you've probably seen memes, you hear that. It's not a whole lot. And when Trump changed the game in 2018 and changed some of the rules, it made it even worse for them. Employees going to pay and they're going to have the least amount of loopholes. The tax code has about 5,800, codes in there. Mm-hmm. 85% of it is to show you how not to pay taxes.
As an employee or as a business owner? No, as
a business owner. Usually as self-employed, usually kind of ways like that. So it shows you. So it's really geared toward really not paying taxes to show you how it's loopholes. Most of those are not for employees. It's not a whole lot that employees can do because, see, the tax code, taxes, the benefits are to the employer because the government makes their money off of all the taxes they charge you as a worker. So they want me to be an employee, grow my business, and hire people. This is why bosses and companies get so many breaks. Mm-hmm. This is why they get all of the credits, because they want me to hire you because I'm going to get my taxes from you as an employee.
Correct.
The more employees I can bring. So the system is designed. So it's not a whole lot. There's some strategies you can do. Like if you got a company, and I always talk about investing into anything that your company may offer and match, because it's different strategies. But my thing is, I want to basically simplify stuff for you. What we do is we understand certain things as a people, and then we grow you into that. So when people say, well, I don't know, 401ks ain't, that ain't the way to go. You shouldn't do 401ks. But the most common person, this is what they know. When you start saying, take your money and invest it into this and that, most people are not going to do what they're not comfortable with. So some of the strategies that I may say and other people that I know may give you may be things that you're comfortable with. Once you're comfortable there, then you start moving. So things maybe like starting off in the 401k and invest in that because it reduces your tax liability. The more I invest in 401k, not just the matching part, not just the retirement part, but it reduces the amount of money I get taxed on. And so that's one of the things that you can do. So if I can reduce my taxes, get matched, and put into retirement, that may be a good starting point.
Correct.
Now you have basically your IRAs and different things like that you can do as an employee. You don't have what they call unreimbursed employee expense. I tell people right now, understand this rule because it's going to come back, is when you pay money out of pocket for your job, and that can be driving places, meeting clients, lunch, dinner, supplies, uniforms, whatever. That went away. That hurt a lot of people.
Can't write that off?
No.
Anymore?
As a W-2 employee, no. This is why I tell you, as a self-employed person, you can. But as a person now, and see, it hurt a lot of people because what we've been doing for the last 3 years, working from home.
Correct.
Even if we're a W-2 person, I used to can write that off. My internet, my home office, all of that. I can't do none of that no more. So right now, there's not a whole lot of strategies other than get a business to help offset some of that for things you're doing every day. And so understanding some of the other things you can do is probably keep up with all your charitable donations. They changed the rule on that too. So less people
when did
now.
these rules change? When did that rule change?
In
Even
18.
In 18. So
Yeah.
when
So when Trump
came
in, he changed a lot of them. And so only 10 to 13% of people claim their house now. So even having a house, so even when you're W-2 and you have a house now, you're probably not writing your home off because the standard deduction went up as far as what the government is going to give you. So the amount that you have interest and taxes on your house don't come up to enough to make a difference now. So you can add that along with your charitable donations. Again, we wasn't going to church as much, so we wasn't tithing as much. Tithing was one of the things that you need
people weren't sending their tithes in.
It wasn't cash apping as much.
They weren't cash apping?
Because you feel guilty when you write there at church. So you sit there, the plate passing, you want to drop a 5, but Sister Adeline watching, so you're gonna drop a 20. Gotcha. So that's every week when you're in church, you're gonna drop some money. But at home, you cash app like, oh, they don't really know. Like I'm sending y'all $4. So it's different. It's different in that sense, though. So all of those things that you basically used to can write off, it don't help as much. But that's things you can do as an employee. But it's hard to save, bro. It's just not a whole lot of loopholes.
So what if I'm a W-2 employee, right? But I buy some investment properties. Can I write off anything from my salary over there if I'm using? Yeah, and no, I know,
but again, you can't do that with your salary. Now, the thing that you can do is if you buy investment property, the money that you pour into that investment property, say for instance, I don't have a tenant, but I had to do repairs, I had to do maintenance, I had to do all of these different things to the house. I got depreciation, I had to get supplies, I had to get contractors, I had to clean, I had to get appliances. All of those things that I spent will now be shown as what we call a real estate loss. That real estate loss will reduce my W-2 income. So now if I made $250,000, but I spent $20,000 on the rental property, that loss from the rental property will reduce that $250 down to $230. So now I'll get taxed on $230 as opposed. So it can help, but
this
is the issue again. This is why not having a business, and this is why you hear people say that. And I get the whole, well, everybody ain't, everybody that is not an entrepreneur. Everybody, I understand that, but you're gonna pay the cost for it. I'm not saying you should be, but understand you're gonna pay the cost for it. Because see, at 250, there's an exemption and an exclusion that if I make over 150, Ramon, I can't write off my rental property deductions no more.
Oh, over what amount?
150.
Over 150,
and that's even joint. So that's if and you know how many people together, especially in Atlanta, gonna make 150.
Yeah.
I can't write off so even all that money I poured into my property, we can't even take that as a loss. We can't even write that off. We can't do nothing with it.
So we got to have some other strategies.
So one of the strategies may be put your rental properties under a business. So if you put it under LLC, now it's not subject to that 150.
Okay.
So now I can write it off because see, again, what we got to understand, people who make the laws, 90% of the time are business owners. Mm-hmm. So when I change the tax laws, I'm not going to change the tax laws to hurt businesses because me and pretty much probably 90% of my friends
are business owners.
So we usually that's why you see whenever tax laws change, business laws either get better or stay the same. Because I ain't changing these tax laws to hurt nobody. When we got to understand, when Trump first got in office, the first thing Trump did, we all forgot about this, but the first thing he did was change the tax bill. Because he was saying, well, what we're going to do, we're going to lower the corporate tax rate because companies going to save hundreds of billions of dollars, and that's going to stimulate the economy because we're now going to hire more people.
Did it work?
They didn't do it. They did it, but it wasn't for that. When they put it out there, they said only 13% of CEOs, because you were supposed to stimulate the economies by giving jobs, giving shareholders bigger returns, start putting more bonuses and incentives in place and put more people in places. And this is what it was supposed to be about, but it wasn't. He lowered the tax rate for corporations because him and his friends are corporations. So they was able to win from this. Now, the whole thing about the stimulating the economy, only 13% of CEOs say they were going to give more money to shareholders. This money was going to go in their pockets. This 200 million that they was going to save, 100 million. So the game is not played for employees. So when all them laws change, so it's not a whole lot that employees can do, because even with the rental property, if you making 150, you're going to lose out. You can't take that expense. So you're going to probably have to take and put those rental properties under LLC in order to get the full benefit from it. And so if you say, well, me and my spouse make too much, I don't want to file with them, I don't want to file with her, then you can't take the rental property, investment property loss as when you file married filing separate. So it don't work to your advantage as a W-2 employee. And I ain't telling nobody to quit their job but what I do tell people is get you a side business or something, try to work that, because you're using your car every day. You got a home office you're bragging about. You're using your cell phone, using your computer, using the internet every day anyway. And if you don't have some type of business, you ain't getting no break for it. You ain't getting no break. But you're doing it anyway. So realistically, if you use it and it works to your advantage from a tax standpoint, then you paying for all of that stuff. Because if it reduced my taxes by $5,000,
that's a lot of money.
I'm still paying for all of that because I have a business. So I might not even see a whole lot of money in pocket as a business owner. Mm-hmm. Because we want instant gratification, we're not thinking about the delayed gratification of the fact of, all right, you know what? I saved $5,000. All right, it didn't come in my pocket, but that's money that paid for the cell phone, that paid for the internet, that paid my car note, all of those little things that it's doing by saving money. And it may not be in my bank account, but I'm still saving. So it's things that you can do, but W-2 employees, bro, it's
tough.
Yeah, it's tough.
But everybody should have a business.
That's my thinking, to something, and the thing is, I ain't saying in an illegal way, you got to actively operate the business, but rich and successful people start businesses, not all the time to make a lot of money, but a lot of times to save money, because those expenses reduce their tax liability.
I got one question. What does delayed gratification mean to you?
Delayed gratification to me means, making sacrifices to right now, not getting everything I want right now, to know that, in the future, I'll be able to live the lifestyle that I want to live. I believe that I'm a testament to that, man, because a lot of stuff I didn't get early on consciously, like, I'm not tripping on that. I remember a quick story before we get out. Like, one of my partners, I had 3 locations at the time, and I was still driving my Ford Explorer. And I remember we pulled up, I went home, I drove it to New Orleans, I pulled up, we was in Holly Grove, and I pulled up, and it was like at the park, it was for the Turkey Bowl during Thanksgiving, and we were talking, me and one of my partners, and it was like, when we pulled up, he said, oh man, they ain't gonna think you got it like that, because you pulling up in the Explorer. I say, bruh, I ain't even tripping on that. I say, but they all gonna be talking about me while my bank basically gonna say something else. And I thought about it like from a delayed gratification standpoint, like I could have probably got a Benz a long time ago, but I always said it wasn't time. It wasn't time. And what I meant by that is when I'm able to buy a Benz and I'm able to pretty much put almost half down payment on it, and I got a note I don't even know that's there because it's so small because I'm not living for it, then it's time. So I wasn't out to I was going to delay my gratification to where now later on I can buy whatever I want, do whatever I want, and now financially it don't hurt me or bother me. And so this is why I say, for one of the reasons why I always say I probably don't have the most money of most people, but I have the most success. Because when you talk about living your lifestyle, living your journey, your destined life for 15, 20 years, bruh, it's not a lot of people doing that. And this is what I really want to get to young people. Like, all right, there's a lot of, I come from the streets, man. I've seen a lot of dudes have a 2, 3, 5-year run. Yes. But after that, all you got is stories. I remember when I used to be, and these young people don't care no more. Like, cause now when you used to be and now you working a job, you tell them, oh man, I was this, man. They're like, man, shut up, go pick them boxes up. Them young people don't care no more. So, my thing is I always, and my friends will tell you, I always said I never wanted to be a used to be. Mm-hmm. I never wanted to be a used to be. I was pretty popular at home, be it sports, be in streets, whatever, but I never wanted to be a used to be. And so my thing is I'm going to delay all of that to when I get older. I'm not going to be that old cat saying, man, I remember when, no, I wanted to live this lifestyle consistently for the next 15, 20, and the next 20 years after this. But now my mission has changed. It's to pour into other people to understand you can live this lifestyle. You can do it for a long term. And that's the thing is that now, but again, we get caught up in this whole, I gotta have it now. And if I don't get it now and I don't have it no more, I gotta still keep it up. I gotta still keep it up. And that's instant gratification. And so delayed gratification is putting it on hold until later. Make all the sacrifices and do it out now so I can have everything later.
I appreciate it. Thank you for being on the Delayed Gratification podcast, Brian.
Hey,
I know they're going to enjoy this one, man, when they watch it.
Hey, I love it, man. I love what you're doing, bro. I appreciate everything you do for me, the community, and yourself, brother. So keep up the work and look forward to seeing you in the future.
All right. Thank you, man.